Is your home worth more in 2025 than it was in 2024? Well, that's what we're going to take a look at. It's the beginning of January, and we have the numbers to look at for the Denver real estate market. Find out what in the world actually happened towards the end of the year there. We had some numbers kind of changing around on us. We had interest rates changing. How did that affect the price of your home? Well, like always, we're going to dig in to all the monthly numbers, but we're also going to take a snapshot look at the entire year for the Denver metro area, whether you're in a single family or a condo or a townhome, kind of evaluate what's going on and take a look at interest rates, find out how that's affecting the market. And then I'm going to pull out my crystal ball and I'm going to tell you exactly what is going to happen in 2025. Now, as always, if you have any questions on this video or anything else that I've ever covered, just go ahead, give me a call, shoot me a text message below. Now, I'm going to show you general numbers for the entire Denver metro area. However, that doesn't mean that your house is up or down in value. So if you want to know yours specifically, what I want you to do is go ahead, you can scan this QR code, you can get an instant home evaluation. Then if you want, I can go much further and spend 10, 15 minutes really digging in, analyzing your neighborhood, your specific house, kind of let you know where I think you fall on the scale of your home's value. So starting off with supply and demand for the entire Denver metro area, okay? Now we're talking all the suburbs, including the Denver area, up to Thornton, all the way down to Parker, Castle Pines, Castle Rock, all that good stuff. So new listings, right? And what we can see is the trend is the same. December, we're down low, 3,400 new listings to hit the market. Last year, we were at 3,000. So a little bit more, almost 10% more, but all these numbers are really depressed. So I wouldn't, say that there's any change from year over year, but it is up, 13% according to this year over year for new listings that hit in December. This is generally the low point of inventory. And now we're going to start to see everything climb. Okay. As people are coming out of the holidays, putting their house back on the market if they expired it or went withdrawn. And we can see it correlates right to our active listings, right? This year, we've got 13,673 active versus the year before at 11,500. So that's a 19% increase year over year for the amount of active listings. Now, we're looking at a 5-year chart here, okay? Now, I can zoom this out and let's see where we at compared to other years. And we can see, these are the 2 COVID years, the lows. And then we kind of peak up and a little bit above and beyond. So let's see, what's going to happen over the next few months over the course of this year. Pending listings. Okay, this is going to be, giving us an indicator for what's closing over the next 30 days. 4,100 to go under contract versus last year, 3,800. So we're still up 10%. So active inventory is up, new listings are up, under contract is also up, which means closings should be up over the next 30 days compared to year over year. Closed listings. Now, closed listings usually takes a pretty big tumble in December, but we can see we were at 5,000 compared to November at 5,100. Now, we had the election in there, which usually slows things down a little bit anyways, but I didn't see as many closed listings, like the numbers plunge, meaning we had more closed listings than I thought we would for December. Last year, we were at 4,400. This year, 5,000. So we were up 13% year over year. Now, normally we can see back in 2024 was our low closed at 3,500. And same thing with 2023 is the low. Let's see, in January in 2022 was the low. So then we'll see. I think we're going to break a trend, actually. From what we saw here, we were seeing more go under contract than we did the month before, and all the other numbers are up. So I do think actually we're going to start our uptrend a little bit early this year. A lot of people hit the brakes with the election. And I think once the election was over, a lot of people got off the fence. And so I think we're going to kind of kick that trend a little bit. And I think we're going to see an acceleration up as far as closings quicker than we have in the past. Okay. Now, days in MLS, getting on to, if you were to put your house on the market, how long would it take? We're going to look at the average here because that makes more sense than the median. 61 days on market. Okay. 61 days before your house goes under contract, not before you close. Okay. Most people kind of confuse that. Oh, we sold our house, which you actually just went under contract. Okay. You hear a lot of people say, oh, I sold it the first weekend. No, you didn't. It still took 4 weeks to close, even if you got under contract that first weekend. And the reason why that's important is because about 25 to 30% of all deals are falling apart right now, mostly due to inspection, right? Sellers are kind of sticking their heels in. Buyers don't want to pay top of the market price for not a great, perfect home. And so we have a lot of friction happening during the inspection part. So a lot more deals are falling apart. And then you have the whole financing part of things with interest rates being as high as they are, which can, usually a deal falls apart in about 3 to 4 week period if there's financing issues. With inspections, it usually falls apart within the first 7 to 14 days. Okay. But we can see days in MLS are going up to 60. That's the highest it's been in 5 years. And if we go back, the last time we were at that number was back in 2013, then before that, 2012, right? And that's when we were still we had just hit the bottom in 2012 from the 2008 recession that happened, and we were just starting to come out of it. Inventory was going down, activity was picking up. So we haven't seen this long on the market in a while. So your expectations, if you are ready to sell now, is that you're going to be on the market for at least 2 months. Because remember, this is an average. So if you're pushing towards the higher part of your price for your neighborhood, it might be 90 or 120 days on the market before getting an offer and going under contract. Okay. So keep that in mind if you're on the sell side. All right. Month's supply of inventory. Now, month's supply of inventory plummeted down to 2.4 back from 3.1, where we peaked out at 3.8. So we're down about 50% in month's supply of inventory over the last few months. Totally common now compared to last year, where were we? We were at 2.1 months of inventory. So we are a bit more up in inventory. Stuff is sitting around longer, right? We are up 14% on months of inventory year over year. Okay. Percentage of closed price to list price. All right. We see this number tumbling. This is if you listed your house at $1 million and you sold at 900,000, you would be at 90% for this number. Now, it doesn't calculate in any price changes you've had on the market. So I don't often look at this number, but what this is telling me is even if you had price drops and you've dropped it down 10, 15% in price, this still says that you're going under contract 1% on average lower than your current list price. Okay. All right. And then shows until you go pending is at 13. So if you're on the market, expect at least 13 showings before you get an offer that you're willing to go under contract on. If we look at the average here, it's up to 16.7. Okay. That might be a little bit better of a number there. And then showings per listing is 4.3 per month. Okay. So your home is only getting shown 4 times. If you're on that 8 to 10 mark, that means you have a lot more traction on your home, a lot more desirable price point neighborhood. All sorts of things can be for that reasoning. But 4.5 approximately showings per month and taking about 14 to 16 showings until you go under contract. Okay. Then to our close price, has your home actually gone up in value or down? Well, again, these are just the general numbers, but month over month, we did drop down to 559 from 565. So down about 1% month over month, not uncommon. But year over year, this is where I am really surprised. We were at 529 in December of 2023 as the median close price. Okay. We're up to 559. That means prices went up 5.9%. Now, just a few months ago in September, we were at 555 compared to last year at 555. Okay. So normally, like we're seeing here in September, we went from 555 all the way down to 529. We did a pretty good correction in pricing, which is completely normal. That happens year over year. You can set your clock to it. This year, we just kind of hover. Since September, we've actually gone up in price. So, why is that? Well, put the election on there, right? There's a lot of people taking their foot off the gas on looking for a house, not knowing what's going to happen. And then, just with the end of the year, coupled on top of that, we just didn't get as many people to list their house. Not as many people are motivated to sell their house, even though they might want to. Maybe they don't have to. And so that's just kind of keeping the prices steady, right? If you've been looking for a home, the actual amount of inventory that's good to look at is very slim. So that's really affecting prices and how stable things are staying. Uh, Again, it is a little bit surprising, right? To see that we have gone up nearly 6% year over year. So what's going to happen? Well, we'll talk about it in a little bit here. Let's break this down into single families real quick. Okay, we're going to take a look single family numbers, then condos, then townhouses, kind of give you an idea, what you're in and how your value is being affected. But once again, if you have any questions or want to know what your particular home value is worth, just go ahead, click on that QR code or scan it, and then there's also a link in the description below where you can get an instant home value, and then I'll dig into it a little bit further for you. So all right, let's look at single families. Single families were down month over month, down from 609 down to 600. So 1.5 price drop, 3.8% increase year over year. Okay. 600,000 ending 2024 versus 578 in 2023. Okay. So up 3.8%, not nearly as much, right? So what's pulling it up? Well, it's going to have to be condos and townhouses, right? To pull us up to that 6% mark. Okay. New listings plunged down 2,500 new to hit the market in December versus last year at 2,200. So a few hundred more, 14% up. That is right on par. Active listings plunged down to 9,600 from December of last year was at 8,500. So quite a bit less or quite a bit more in the active listings, up 13% year over year, but still not enough to move the needle. Pending listings down to 3,200 from 3,600 month over month, but that's up from 2,700 last year. So up 15% in pending sales or pending listings on the MLS for single family. Closed just kind of about bottomed out here, 3,800, which is up 20% year over year in how many closed listings in December. I attribute this to the election and that getting over, and then a bunch of people who were, hitting the brakes got off the fence again. Days in MLS average 60. Month supply of inventory down to 2.2 months, down from 2.9 last month, but up year over year by 5% approximately. And then showings to pending on single families is higher. It's 18. Why? Probably because the average price point is higher, right? And you have a lot more inventory to choose from. So 18 showings until you go under contract and about 5 showings a month. So it's about 2.5 months, according to those numbers, for the average time to go under contract. Okay. All right. Let's break it down to condos. Let's see what we got going here. Woo! Yowza. That's a drop. So month over month, the median home price for condos went down to 340 from 373, $30,000 down. Wow, 8%, 9% month over month, down 3% year over year. Now we're going to jump ahead and find out how many just closed here because maybe it's not that many. And so the numbers are skewed because there's not that many that have actually closed. The amount of closed, 543 properties to close. So yeah, I would say the numbers could definitely be skewed since there's just not enough, closed data. New listings down to 423, which is still up 8% year over year. The amount active went down to 2,100, which is up 51.6%. Look at this. 2,127 active condos currently. Last year in December, there was 1,400. That is a 51% increase. That is quite a bit. Gosh, last month, that was just huge. In October, it was 3,200 versus 1,700. That's a, 80% increase? Good Lord. All right. Pending listings down to 456. So bit of a slump in pending listings. Closed listings, though, jumped up a little bit month over month from 522 up to 543, but up a little bit year over year by 9%. So still more activity in the condo market. Days in MLS, the average is up to 69. So quite a few days on market if you're a condo owner. Month supply of inventory plunged down to 3.3%. So we're getting back into the seller's market here where it was 5 months of inventory or 5 months supply of inventory just a couple of months ago. So if you're in the market for a condo, know that the inventory is getting squeezed. Happens this time every time of year. And we're seeing a drastic reduction in how much inventory is out there, but we will start seeing that number tick up. We're also going to see the amount of buyers tick up as well. Okay. Shows until you go pending is 12 and a half, so not as many as single family. Showings per listing is 2.7 per month. So 3 showings per listing in condos. Not very much. All right, townhomes. Now, townhomes, there's not a whole ton in Denver, so the numbers get skewed really easily. But year over year, we're down month over month by about 4 or 5% in price, which, again, townhomes don't have a ton of numbers there. So it's easy to skew the numbers. But we're at 456 versus last year, we were at 450. So just up 1.3%. The amount of new listings that hit the market just tumbled down to 283. I mean, look at that spike. Let's back up here and look at that. Like, it just went wild. I think there was a recategorization on the MLS that is kind of skewed with these numbers a little bit. I don't think we had, we didn't go from 122 new listings up to 982 in a few months. I think there was a recategorization, and that's messing with the numbers a little bit. The amount of active listings has plunged down to 1,088, but that is up from last year at 448. That is up 142%. 142% more townhomes on the market this year than there were last year. A lot of new builds are being classified as townhomes too. And so I know a lot more of those are hitting the market now. Pending listings down to 348 from month over month, was at 416, but that's still up 100% from last year, where we were at 176 to go under contract. Now it's at 348, so activity still picking up. Closed listings did drop month over month, not much, but compared to last year, up 251%. Days in MLS creeping up there at 57, but still lower than the average for single families and condos. And then month supply of inventory is down to 2.3. So that inventory is really starting to squeeze in townhomes down. So if you're looking for a townhome, this might be a pretty active spring for you. If you're a seller, if you're a buyer, you might have to compete. Okay. The average numbers of showings per townhome, 13, and the amount of showings to go per month is 3.9. So 4 showings per month if you are trying to sell a townhome, and it's taking you approximately 13 showings before you go under contract. So where does that lead us going into 2025 here? Well, I think the name of the game is the same that it's been for the last 2 years. Interest rates are driving the narrative out there. Every time interest rates dip down by 1/4 to 1/2 of a point, we see a huge surge in activity. Okay. Every time we see interest rates go up by 1/4 to 1/2 of a point, we see our activity just kind of drop off of a cliff here. Okay. And if you're wondering what interest rates are doing, let's go ahead and take a look here. And this is what's really been funky out there. This surpasses kind of my financial knowledge as far as, well, the Fed has lowered interest rates by 100 basis points, or 1 full percent. The 2-year has gone down by more than 1% over the last few months, since September, since they started really dropping rates here. But the 10-year and mortgage rates have gone up. And in fact, since September, let's back up here. September was the low at 6% for your average conventional mortgage rate. And we're up to 6.86 now. So almost up 1 full percent while the Fed is dropping rates. Okay. So this is keeping a lot of people stifled here. In November of 2023, we hit almost 8%. Are we on our way back there again? I don't know. Nobody does. I mean, heck, the Fed doesn't know what they're going to do, 30 days before they do it, let alone, what's going to happen in the next 3, 6, 12 months. But I think we're in this stalemate sort of situation, okay? And if you're trying to push the limits on what you're asking for, you're going to sit on the market as a seller for 60 plus days. Okay. And I think you're going to have to do numerous price drops, and you'll probably end up selling 5 to 10% below what you thought you would get. Okay. If you're a buyer, the good homes in the good part of the neighborhood, not against busy streets, with homeowner upgrades, I think those are still going to get a lot of attention. Okay. The houses that are sitting around generally are either A, shot too high on pricing, or B, are next to either commercial space or right next to a busy street. There's some sort of deficiency on where it's located, and that's why it's really sitting there. Okay. The stuff that's done well in the middle of the neighborhood, like those are still getting traction as long as they're priced appropriately. So you can't sleep on stuff if you're a buyer, right? And the right thing comes along, you don't know what's going to happen. I mean, if they go down in interest rates by, to 5%, like we're going to have $50,000 over asking bidding wars within days. Okay. And so you just never know what's going to happen, right? I don't know. I've been wrong about the market last few years and what's going to happen. Most big pundits and people that are paid millions of dollars every year to figure this stuff out have all been wrong, right? And so I think we're just going to chug along. Do I think we're going to see another 6% increase this year? No, I think that's optimistic. And I think that just happened towards the end of the year as a result of the slowing seller season due to the election happening in the end of the year. And I think that artificially bumped it up a little bit. But I mean, 4%, it's not off the table. So we might just be on an average increase over the next 12 months. And again, there's a few ways you can reach out to me. Of course, you got the good old cell phone text message. Pick up the phone, give me a call. I actually do answer my phone. I'll be happy to chat with you about the market, what's going on. If you want to know what your house is doing, because your house is different than the median numbers all across Denver, scan this QR code, get an instant home evaluation, or you can reach out to me through this QR code, and you can get on my weekly email and kind of keep posted on what the market is doing. I hope you have a fabulous new year. And if you want to see a ridiculously long video about the Denver metro area and every city in it, just watch this video.